This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, December 11th, 2015. Euro dollar. So the euro has settled into some consolidation following an impressive surge and correction out from those recent multi-day lows at 105.20. At this point, it's going to be important to keep an eye on recent resistance at 110.43. That's the high from this week, and a recent low that we saw at 107.96. And a break above or below will be required for clear directional insight. A push back above 10.43 could open the door for an acceleration into the 112 to 112.50 area, while back below 107.96 would suggest a lower top in place at 110.43 in favor of the next downside extension back below 105.20 and towards that March multi-year low at 104.60 further down. Sterling dollar. So cable continues to make a series of lower tops and lower lows off that 2015 high at 159.30, and a fresh lower top is now sought out somewhere below the most recent lower top at 153.36 in favor of the next downside extension towards the 2015 low at 145.66. Right now, key support comes in by the recent low at 148.95, and a break below will be required to confirm a lower top in place and accelerate those declines. At this point, only back above 153.36 would compromise the current bearish outlook for sterling dollar. Dollar yen. So dollar yen is broken down below some key range, multi-day range over the past several days and even weeks between 122.20 and 123.75. And this latest breakdown suggests that we could still see deeper setbacks towards the 119 to 120 area in the sessions ahead. Any rally should therefore be very well capped into this previous support, now turn resistance around the 122.20 area, with only a close back above 123.76, ultimately negating the current downtrend or the current downside pressure and opening the door for a retest of the 2015 high at 125.85. Euro Swiss. So Euro Swiss has been confined to a multi-week consolidation, though the market is in a recovery structure off those record lows that were seen earlier this year. Given that, the market should be very well supported ahead of 107.14, with a break back above the recent high that we saw from September at 110.50, expected to open the door for a fresh upside extension and a continuation of this recovery towards the 112 to 115 area. Aussie dollar. So Aussie has been consolidating over the past several weeks, though the market is confined to a broader downtrend. As such, any rally should continue to be very well capped ahead of 74 in favor of the next downside extension back towards and eventually below the multi-year low from August just ahead of 69. Dollar CAD. So dollar CAD has continued its impressive surge, with this market locked within a well-defined uptrend and breaking to fresh 11-year highs above 136. At this point, daily studies are looking a little bit overextended, so there is possibility for a short-term correction before the market heads higher again. Any setbacks, however, should be very well supported into the 130 to 133 area, while ultimately only back below 128.32 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So despite some recent gains in Kiwi, the market remains confined to a broader downtrend and is expected to continue to be very well capped below the recent medium-term lower top, or the anticipated medium-term lower top, in the 69 area. At this point, only back above 69 would compromise the integrity of the current downtrend, with deeper setbacks now favored eventually back towards the recent August low and towards the 60 to 58 to 60 area further down. SPX 500. So the S&P 500 has been showing signs of a medium-term lower top below the May record high at 2137 after a gain stalled out at 2117 back in November. At this point, though, a break below 2003 would be required to confirm and accelerate the bearish outlook, with the market seen then trading back down towards critical support at 1870. Back above 2117 would negate and open the door for a retest of the record high. Gold. So gold has been consolidating off recent multi-year lows at 1046, and the market is trying to decide whether it wants to put in a more significant base or continue with this bearish price action to below 1046 and towards psychological barriers at 1000 further down. At this point, a break back below 1046 would expose 1000, while a push above 1100 would do a good job of taking the pressure off the downside, suggesting some form of a base and opening an acceleration to the top side.